Warren Edward Buffett, often referred to as the Oracle of Omaha, is an American investor, businessman, and philanthropist, widely regarded as one of the most successful investors of the 20th century. Born on August 30th, 1930, in Omaha, Nebraska, he developed an early interest in business and investing, influenced by his father, a U.S. congressman and businessman. His investment philosophy was shaped at Columbia Business School under Benjamin Graham, the pioneer of value investing. As of February 17, 2025, Forbes estimates his net worth at $149.6 billion US, making him the seventh richest individual globally. The video, lasting 10 minutes, will cover three main sections: who Warren Buffett is, how he amassed his fortune, and his investment strategies, ensuring a balanced narrative for viewers interested in finance and investing. Who is Warren Buffett? Warren Buffett's life and career are a testament to his dedication to investing. Born as the second of three children to Layla and Congressman Howard Buffett, he showed entrepreneurial flair early on, buying his first stock at age 11 and filing taxes at 13. He studied at the Wharton School of the University of Pennsylvania before graduating from the University of Nebraska at 20 and later earning a master's from Columbia Business School. His early career included working as a securities analyst and stockbroker before founding Buffett Partnership, Ltd. Since 1970, Buffett has been the chairman and largest shareholder of Berkshire Hathaway, transforming it from a struggling textile manufacturer into a global conglomerate. He is known for his frugality, still living in the same Omaha home purchased in 1958 for $31,500, and his philanthropy, pledging to donate 99% of his fortune, primarily through the Bill and Melinda Gates Foundation. In 2010, he co-founded the Giving Pledge with Bill Gates, encouraging billionaires to give away at least half their wealth. How did he make his fortune? Buffett's fortune, estimated at $149.6 billion in February 2025, stems from his investment acumen and strategic management of Berkshire Hathaway. In 1965, he took control of the ailing textile company, using it as a vehicle to acquire and invest in other businesses. Berkshire Hathaway now owns subsidiaries like Geico Insurance, Duracell, Batteries, and Dairy Queen restaurants, and holds significant stakes in companies like Coca-Cola and American Express. His wealth accumulation is rooted in value investing, buying undervalued companies with strong fundamentals and holding them long-term. From the 1960s through the 1990s, Berkshire Hathaway's shares gained about 28% annually, far outpacing market averages. His success is also attributed to avoiding high-risk moves, as seen in his cautious approach during market downturns. By 2024, Berkshire recorded operating income of $47.4 billion, underscoring its financial strength. Investment strategies. Buffett's investment strategies are a cornerstone of his success and are widely studied by investors globally. He follows the value investing philosophy of Benjamin Graham, focusing on securities priced below their intrinsic worth. Key tenets include value investing. Buffett looks at companies as a whole, assessing performance, debt, and profit margins, rather than focusing on short-term stock market fluctuations. He seeks companies that are public, less reliant on commodities, and undervalued. Long-term holding. He advocates for boring investing, emphasizing long-term ownership rather than frequent trading. This is evident in his decades-long holdings in Coca-Cola and American Express. Margin of safety. Buffett prioritizes a margin of safety, buying stocks at a significant discount to their intrinsic value to mitigate risk. Thinking like an owner. He views investments as owning a piece of a business, not just trading stocks, which influences his decisions to hold through market volatility. His approach has delivered a compounded annual gain of 19.8% for Berkshire Hathaway since 1965, compared to the S&P 500's 12%. Despite his success, some critics argue value investing may be less effective in today's tech-driven markets, though Buffett's adaptability, like investing in Apple in 2016, shows his strategies evolve. Warren Buffett's investment performance. To measure Buffett's investment performance, we focus on Berkshire Hathaway Class A shares, as they represent his primary investment vehicle. Historical data indicates that in 1965, The year-end stock price for Berkshire Hathaway Class A shares was $12. As of April 4, 2025, the latest closing stock price is $742,540. To calculate the total return, we assume an initial investment of $100 in 1965. At $12 per share, $100 could buy approximately 8.333 shares. The current value of these shares in 2025 would be 8.333 $742,540 equals $6,187,833.30. It's important to note that Berkshire Hathaway does not pay dividends, so the total return is solely from price appreciation. This aligns with Buffett's strategy of reinvesting profits back into the company rather than distributing dividends. The S&P 500 index includes both price changes and dividend reinvestments in its total return calculation, providing a comprehensive measure of market performance. To find the total return from 1965 to 2025, we relied on historical data from various sources. One source indicates that a lump sum investment of $100 in 1965 would be worth $37,073.91 by 2025, including dividend reinvestments. This suggests a total return of 37,073.91%, or approximately 370.74 times the initial investment. To verify, we also considered annual total returns from, which provided annual returns from 1965 to 2024. However, calculating the exact cumulative return over 60 years manually was complex due to the need for compounding each year's return. Given the consistency with the lump sum investment value from, we adopted $37,073.91 as the final value for a $100 investment from 1965 to 2025. Comparison and analysis. Comparing the two, Warren Buffett's investment in Berkshire Hathaway yielded a total return of approximately 61,877 times the initial investment, while the S&P 500 yielded approximately 370.74 times. This significant outperformance can be attributed to Buffett's investment strategies, which include value investing, long-term holding, and a margin of safety approach. His ability to identify undervalued companies with strong fundamentals and hold them for decades has resulted in compounded returns far exceeding the market average. To illustrate, a table summarizing the comparison is provided below. The difference highlights Buffett's exceptional performance, with his investment growing nearly 167 times more than the S&P 500 in terms of multiplication factor. 61,877 versus 370.74. This can be linked to his focus on long-term value, avoiding high-risk moves, and leveraging the power of compounding over decades.